Confluence zone is an area in the market where we have more than one reason to take a trade. And let's assume that we are in a downward trend and the market is forming lower highs and lower lows. Then we see that the market is about retracing after an impulsive move. These are all impulsive move retracement, impulsive retracement, impulsive retracement. So and then we know that the market is about coming into this region. So we don't know exactly. So then we go ahead to draw your bearish trend line to somewhere around this, just connecting 2 points. Oftentimes it will look something like this. Then a lot of traders just wait for the market. They corrective move to get to this point, then they look for a sell signal in form of reversal pattern or candlestick pattern. So that's one way to trade. And then in order to consider this position or this area a confluence zone, then we are going to look for more reason why we should take a sell trade from this zone. And if you look closely, you are going to see that here is a support area. So and we have the market broke this support area, and then this is looking to form somewhat of a support broken turn resistance. So this is about giving us an horizontal structure in addition to the vertical structure that you can see in the form of this trend line. So if we should draw the horizontal structure to something like this and the market gets to this place, now we have two reasons to go short on the market. So having two reasons, more than one reason to enter a trade is what is meant by confluence zone. And this can be in the form of any form or idea that you use to take a trade. It can be because now I'm talking about horizontal and vertical reasons to enter this trade. Another trader can come and say, oh, if this is an impulsive move, then if we should draw a Fibonacci retracement too, and this is giving us around 50%, then that's another reason why it's going to enter a trade. Fine. So we can also add that as a confluence, another confluence or another reason to enter the trade as well. So confluence zone doesn't really mean your own specific reasons to enter a trade. It just means that having more than one reason, you as a trader, having more than one reason to enter a trade at that point, that's what is meant by confluence zone. And then professional traders use more than two reasons as well. So you can have vertical structure giving us a signal to enter the trade at that point, and also horizontal structure respecting that decision. Then we can have a Fibonacci retracement to respecting that decision. So all of these three things are saying the same thing, and then as a trader we need a strong reason to enter a trade because you are putting your capital online here. So it is very important to have more than one reason to enter a trade, and this is kind of a good thing. So let's quickly go over how this looks on a real market. So
if you are enjoying this video and find it helpful, please leave a like and comment to support our effort. We appreciate it. So let's get back to the next point.
At this point we can see that the market is bearish. So and then if you look at this, we have lower low, lower high, lower low, lower high, then another lower low is formed, and we are seeing some sort of a retracement here. So the first thing you can do, from the example that I just showed you from the sketch, we can have our bearish trend line drawn. Then after that we'll be expecting that the market get to this point around here, then we look for sell. But to make this a confluence zone, we should look for another reason, another legit reason, not just you coming up any reason from your mind, a reason why other traders will want to sell at this point. So and that is resistance broken turn and support broken turn resistance in this case. So we have a support zone here, and then we have this is going to be, we are expecting a resistance zone. We are expecting this to form still a resistance zone because the market has broken the support zone. So we can just draw the trend line somewhere around here. Perfect. So now if the market gets into this zone, then we have a confluence zone, then we can go and short the market from there. So and another reason why people take trade is using the Fibonacci tool. So if I should take the Fibonacci tool and then just draw it around from the impulsive move, the leg that created the impulsive move up to the point of the retracement. So now we have this 50% also in that zone, so which signifies that the Fibonacci tool is also respecting this decision we are about to take. So now we have three reasons to enter the trade. We have which makes this zone a confluence zone, and then we have it's likely that we have high probability that the market is going to go in our direction. So that is what is meant by confluence goes high. So I'm going to replay, just play this, and you're going to see how the market turns out. But before then, please note that this is an high time frame. Most strategies work best in higher time frames. But mind you, even if you are not taking your trade in higher time frame, it is good to understand the movement happening in the high time frame. Then you can just switch to lower time frame, probably 15 minutes or 1 hour. Then you look for a setup that is respecting what you just analyze from the high time frame. So in this case, this is the daily time frame. If we should switch to the 1 hour time frame, you are going to see that this is going to play along, or you can just go into the lower time frame to look for entry criteria. So one of the reasons why I enter a trade in the lower time frame is using a candlestick chart pattern. So but I'm going to show you the formation of the candlestick, but let's just play this and then see what happens. So I'm going to hit the play button. You can see the market gets into, just touch it, then the market is in the zone at this point. Can you see comes? So at this point we can just enter a sell because we are in the zone. Can you see the market just keeps falling after that? So now, just like what I said, I'm going to go into the 1 hour now and show you how I'm going to enter this trade. After you see, you are going to enter such trade when you notice that this has started forming this reversal. We have the impulsive move, we have the corrective move. I started forming. Then you are going to switch to the lower time frame and start looking for maybe candlestick patterns or reversal chart patterns to enter a sell. That's how you enter this kind of trade. So I'm going to show you now. So now, as you can see, immediately the market touched the trend line, the daily trend line. We have a formation of an engulfing candlestick, and then some people can call this maybe evening star or whatever, the formation of this tree. However, I trade using engulfing candlestick, so I'm going to consider this an engulfing candlestick. Then I'm going to take a trade immediately after the closure of this bearish candle that engulfed this hammer. So that is how I enter my trade, and then the stop loss will be somewhere around there. This 1 hour, so this how is going to look. Stop loss will be somewhere around there. I enter a trade using ATR, so stop loss will be somewhere around there, and then my TP will be 2:1, just twice the risk I'm risking. So that's just it, guys.
Join our Telegram channel for free. Thank you for watching. I will see you in the next video.